The following presentation is brought to you through the paid memberships of notary-stars.com, the only notary training platform and resource library with over 150 hours of training on every loan product under the sun. Together with our sister website, onlinenotariespublic.com, which focuses on notaries who are pioneering in remote online notary, we strive to give you a safe place to ask questions, get answers, gain confidence in your notary career, and achieve success without overfabricating the truths about our industry. If you would like to support us, please consider liking this video, subscribing to our channel, sharing this video with a colleague, or becoming a member and trusting us to help you achieve the level of success you desire.
Well, hey there, friends. If you're new to Monday General Mentorship and Notary Stars this evening, welcome. If you're returning, welcome back. My name is Beth Hathoot. I'm the lead instructor here at Notary Stars. I'm joined by our founder and co-owner, Mr. Ronnie Mickle, and tonight we have invited a notary tax expert, Samantha Betanzos. I put an N in there every time. I can't do it, Samantha. I'm sorry. Betanzos, in order to help everyone with questions on filing their taxes for their notary business. We hold MGM sessions every Monday, except for holidays, at 5 p.m. Pacific Standard Time or Pacific Time, 8 p.m. Eastern, and that works out to be 6 o'clock Arizona time. So mark your calendars for future meetings. In these sessions, we address all kinds of questions related to documents, business practices, remote online notarization, marketing your business, and more. Let's help Samantha feel welcome this evening by doing just a couple of things. Update your Zoom label with your state abbreviation. Come on, come out for your state. Let us know where you're tuning in from. Show your face. Turn your cameras on. Do you know it is so much easier when the speaker can see your faces in the audience rather than just a static picture? And get involved during Q&A sessions. So raise your virtual hand at the end of the presentation to ask questions or participate in discussions. Let's make the most of this hour and leave feeling inspired, informed, and ready to conquer our notary tax filings. Mr. Mickle, are you ready to get this party started?
Absolutely, but we have a couple of announcements for the evening. First of all, I know a lot of you are very excited. We're about to be spinning that wheel for our $1,000 contest, which is the winner is announced tonight. So all of you sent in your entries last quarter, and tonight is when we actually announce that. So in just a little bit, we're going to be announcing a $1,000 winner. Hope it's you, whoever you are. The second thing that I want to announce tonight is we just launched our fourth quarter contest, and we're taking it away from the notaries this quarter, and we're putting it on your kids. So it's all about a drawing contest, and we've posted the parameters in LinkedIn, Facebook, Instagram, and in your newsletter this week. Kirsten's going to be posting a link to the weekly newsletter, and we actually have just started, as of this week, making the newsletter available online. So you'll start seeing that pop up where you can see what's going on for the week. We know we get buried with the NNA and all the other trainers that you're looking for each week. So we're going to have a central location. So Kirsten's going to be posting that in the chat. And then the last thing that I want to announce before we get started is that our annual membership drive. So we do a membership drive only in the last quarter of the year for annual memberships. We know that people sign up for annually throughout the year. There are no codes needed this year in order to get those steep discounts to become a yearly member. Now, if you're already a yearly member, you are grandfathered into your rates. Prices did go up in 2024, and they're going up in 2025. So if you would like to get grandfathered into this year's rates for the life of your membership, go ahead and check out our Black Friday sales. Kirsten's going to be posting that in there as well. We also have discounts on previous marketing conferences that I've given on how to build a website, on how to SEO for notaries, and upcoming conferences. So if you buy a ticket to one of those conferences, you get a ticket for my upcoming conference in December. And you also get discounts on printed marketing materials like resumes, lanyards, all the things that Kirsten does. So with that said, Miss Beth, are you ready to spin the wheel? And let's
Yes.
see right off the bat tonight, let's see who wins 1,000 big old dollar bills.
Let me know if you can see this wheel.
We can see the wheel, and
Right. And Cherry with our big logo in the middle, ready to announce the $1,000 winner from last quarter's contest. Give me a countdown. 3, 2,
2,
1.
1. All right, let's see if Valerie is here tonight. Valerie is not here tonight, but we will be contacting Valerie to let her know that she is the winner of the contest. And guys and dolls, we do have another contest coming up this quarter, and it's actually a really cool contest. It's a Starry Holiday Night theme. Your kids can design whatever they want to as long as they're using natural products, not any chat GPT or anything like that. No digital products, but as long as they're using crayons, pencils, anything that they want, any kind of medium, they can enter the contest and they might be winning in January. Miss Beth,
Awesome.
I'm going to turn this over to Kirsten because I am absolutely terrible at reading notes, and I want to give Miss Samantha a proper introduction. Miss Kirsten, how about you introduce Miss Samantha for tonight and give her the Notary Stars welcome? And while Kirsten's doing this, everybody, please turn on those cameras. I'm actually going to go to gallery view so that we can give our signature wave to Miss Samantha while Kirsten introduces her.
All right. So we had the chance to listen to a live session with Samantha, thanks to the Notary Academy retreat that we went to. So Samantha Betanzos, yes, aka aka the paperwork and errand lady, provides tax preparation, mobile notary and loan signing services, document preparation, provides tax preparation, legal document preparation, and more. The paperwork and errand lady has been in business since April 2014 and began as a side gig to assist seniors with online needs and running errands. A network meeting led Samantha to Notary to Pro. Training and services were added from there. Yes, Notary to Pro. Samantha has a background nonprofits and real estate. She holds a BA in psychology from San Diego State, has been a commissioned California notary since 2002, is registered as a legal document assistant, has been tax preparer since 2014. Most recently, Samantha became an enrolled agent, the highest credential awarded by the IRS. One of Samantha's top priorities is tax education, as everyone must file, but few know how income tax works, me included. Maybe one day her dream of required high school tax courses will come true. Samantha is with us today to help all of us get our arms around the task of year-end information gathering so we are prepared to file our taxes in a few short, crazy months. All right, Samantha, we are ready when you are.
Awesome. Thank you so much for my long introduction. We'll cut that down next time. As you can tell by the introduction, I love education. That's why I have all of those certifications and offer all of those services, because as soon as I feel like I understand something, I move on to the next thing because I've gotten bored by that. I am so happy to be here with you guys. Kirsten, I love that you have the owls in the background. Obviously, that is my company logo, and owls are a sign of wisdom, at least in our culture. And my husband's culture, they bring bad things. So we'll just go with my culture. And so that was really cool. I like that I saw the owls in the background. I am going to get started. I'm going to share my screen, and it'll take me a minute to throw my slideshow over there. because I have a lot of information to share with you guys, and we don't want to keep you up too late because I know a lot of you are on the East Coast. So my goals for this evening are these. This is an overview. Taxes are in depth. I've been doing them for 17 years, 7 years as a volunteer and 10 years now as a paid preparer. And I still learn something new every single day. I still take hours and hours and hours of classes. So I can only give you the tip of the iceberg information that I think you need to at least know about so that you can further investigate what you need to know for your business. That is the goal of tonight. And the first thing we need to talk about in that is understanding what business structures are, because a lot of people don't understand this. Let's see if it's going to change for me. There it is. So there are a few types of business structures. And it's important to acknowledge that some of these are have tax implications, and some of them are protection. So a lot of people say, well, I'm an LLC, I file as an LLC. LLC honestly has nothing to do with taxes. Zero. It's more about how you are registered for tax purposes. So you may be a single member LLC, which means you're still a sole proprietor for taxes, but for protection, you have an LLC corporate veil. There is some question, and there have been some fights in court as to whether or not we even have protection. There are some very clear cases that doctors, lawyers, CPAs do not get protection from an LLC because the business is based on our knowledge. And so I just want you guys to be aware of that. That's way out of tax realm. I am not an attorney. You're going to hear that all night long. You guys say it too. But I do want you to understand that there's some thoughts that LLCs may not protect notaries because we fall into that service industry where the business is based on our knowledge, and therefore you can't hide behind a corporate veil to protect you if you're being negligent. So just keep that in mind. But again, LLC, nothing to do with tax preparation. If you are a partnership LLC, then you would do a partnership taxes. Unless it's a spouses who do joint taxes, they can actually still be considered sole proprietors sometimes. And then there's corporations. And as an LLC, you can also opt into being an S Corp for tax purposes. So if you didn't do that election, you're going to fall into the sole proprietor or partnership. If you've never done an LLC, you're a sole proprietor unless you have a business partner, and then you're a partnership. The forms you're going to see tonight are very much for sole proprietors. However, most of the information relates to partnerships. Some of the information relates to corporations. So this is the Schedule C. If you've been in business for a while and you're a sole proprietor, you should have seen this on your tax return somewhere. This is actually your business tax return. And once we get a bottom line on this form, then it goes onto your 1040, which is your personal tax return. A lot of people confuse this form with your personal write-offs. Writing off the mortgage on your house, writing off the registration for your car, although that can go in both places. The medical expenses, those are personal deductions, which are on the Schedule A. The Schedule C is only about your business. So think of it as a totally separate tax return when you're thinking about doing taxes. The Schedule C is made up, you'll see at the top, it's kind of your company information. Here's your income. This is all of your income from the business. Doesn't matter if it's on a 1099, doesn't matter if it was a $5 cash tip. By law, you are required to report all income, no matter how you get it. So if you get eggs as a tip, you are supposed to say how much those eggs are worth and include it in your income. All of that income would go here on the top section. And then the expenses come down here, and you get a bottom line at the very bottom, a net profit or loss. So talking about income, and what to include and when to include. So we talked a little bit about what to include. Everything. There is actually a provision in the law that even drug dealers have to claim their income on their taxes. Although if it's illegal, you can't write anything off. You can only claim the income, but it's in tax law. That is every dollar that we get, service, trade, anything that you get that's of value is considered income. There are some benefits to reporting it other than it being legal or illegal and what are you going to get caught or not. It is important to think about things like buying a house. Are you putting all of your income on there so that you can qualify one day to buy a house or to get a line of credit or whatever you may need? The lenders look at this Schedule C a lot of times, and they will take the bottom line from this Schedule C and decide if you qualify for that loan. The other thing is when you receive the income. So in tax law, there is something called constructively received. And constructively received means when an amount is credited to your account or made available without restriction. So if you think of selling a house, you put money into an escrow account, that money is not available to the seller until the day escrow closes, right? So while it's sitting in that escrow account, that's not considered income. The day that money is released to the seller, that's the day that it becomes income. It's the same thing for you as a signing agent. If you do a signing on November 20th and you put it into your software that you did this signing on November 20th, and the signing service mails you a check on December 28th for $100, but you don't receive it until January 2nd, have you constructively received that check yet? No. So most of us use the cash method. Until you constructively receive that money, you don't count it. You're going to count that $100 in 2025, even though you did the signing in 2024. The signing service is going to correctly include that $100 on your 1099 because they sent out the check on December 28th. That's when they get to write it off. So you can see that there might be discrepancies in how much money you have on a 1099 from XYZ signing service because they might have mailed it one year, you received it the next year, you're going to count it on different years. It's really important to track your own income and not depend on 1099s. I actually personally completely ignore 1099s and completely go off of my bookkeeping software. It's a good practice to compare them to make sure they're not totally out of the ballpark, but honestly, they're not always going to match. And as long as your income is higher than the 1099 total from all sources, there's no reason for anybody to look at it. So if you get $20,000 worth of 1099s, but you're including your cash tips and everything else you got, so you have $30,000 in income, the 1099s don't really matter. The IRS receives 1099s, but they don't see it laid out on your individual tax return. Now, plot twist. What if you received the check on 12/29/2024, but waited to cash it until January? Technically, you constructively received it in 2024, the day you received the check, because you could have gone and put it in the bank. You had access to it. You chose not to use it, and so you wouldn't put it to the next year. Is anybody going to know that you got that check in 2024? I don't know, but I'm giving you the law and how it's supposed to be. All right, so the next thing we're going to talk about is expenses. What are business expenses? Business expenses are both ordinary and necessary, and that is actually what tax law says. What the heck is ordinary and necessary? I can't tell you, neither can the IRS. That's as gray as it gets. It's right there, that's how the tax law is. So if you buy a Hummer to go around and do your notary services, is that ordinary and necessary? Probably not. But what if you're a notary in Beverly Hills versus a notary in the desert? Maybe it's more necessary. You might The notary in Beverly Hills is going to have a better argument that that is ordinary and necessary and they need to fit in with their clientele than the people living out in a lower income area that probably doesn't need a Hummer to fit in with their clientele. So the point of that is there's not always clear lines with business expenses. Business expenses are ordinary and necessary, and you have to be able to support that position if you're ever called into question in an audit. And that's where your preparer bookkeeper will talk more about whose responsibility it is, but that's where they will come in and kind of help you decide if they're willing to put their necks on the line for the position and if you're willing to put your neck on the line for the position. Because the tax preparer's job is to protect you in an audit. We don't want to put anything, I can throw anything on your tax return. Nobody's going to know until we go through an audit. Honestly, I could, and it happens all the time. But I want to make sure that I'm not going to get in trouble, and I want to make sure that you're not going to get in trouble. And that's what a good tax preparer does, is they go through these things and decide together if these are actual business expenses. Not always, but a lot of times they do need to be exclusive items. I tried for years when I started as a notary to figure out how to write off my acrylic nails. And I truly felt that we should be able to do that. Like, people are looking at my hands. My hands should be pretty. But because I go out into the world outside of my job and my nails are still pretty, it would not be considered a write-off no matter how much I cry about it, because I still think it should be. The other thing I wanted to mention about write-offs is they are not dollar for dollar. And I hear this a lot. Go out to dinner, take that client out to dinner, you know, the $200 meal that you guys are going to go to. It's a tax write-off. That doesn't mean that you save $200 on your taxes. That means you take $200 off of your income. So if you're in the 20% tax bracket, you might save $40 on your taxes because of that meal. But I just want you to remember that just because things are a write-off, you don't want to overdo it, because it's not saving you dollar for dollar on taxes. All right. I'm checking my time. I'm trying to see if I'm staying within my time. And of course I'm not, because it's always way too much information. So I'm going to keep moving.
Nobody here is going to hate you for that.
What was that, right?
I said no one here is going to hate you for that. We're all we're all listening very intently to you.
I honestly try and I keep it in a time when I practice it, and then I get on here and I'm like, oh, I thought of that. Oh, I got to add this information. You need to know this. Deductions, I'm going to cover the highlights because there's too many to be able to mention them all. One of the ones that I think gets missed a lot are gifts. And we talk a lot in this industry about going out and wining and dining and bringing people treats and giving people gifts. Something to think about: gifts are only deductible up to $25 per person per year. The whole year. So if you go to the same escrow officer and you bring them slippers in January and a blanket in December, you can only write off $25 of whatever that total was for the whole year for that person. You also, in your notes, need to write who the present was for, where, you know, that you gave it to them, so that if the IRS ever comes and audit you, you can prove that you didn't count more than $25 per person. A cool workaround for that is to do a raffle. So instead of making it a gift, maybe you bring a whole bunch of gifts to one office and you turn it into a raffle, and now it's 100% deductible. There's no limit to it. Advertising, any of your promotional items, sometimes we talk of those as if they're gifts, but if they're under $4, they're actually considered promotional items. So then it goes into the advertising category as opposed to the gift category. And then I think you guys know probably most of these: insurance, professional services, your tax preparation fees for your Schedule C. Make sure your tax preparer is separating that, because then you can write off the Schedule C portion on your business taxes. The other big ones: rents and leases, leasing equipment. I lease a printer. If you rent an office, all of your supplies, your taxes and licensing. Business travel is a big one: planes, trains, automobiles, mileage, hotel. Remember, it has to be business all the days that you're counting. So let's say you go on a trip and you stay for 6 days, and the first 3 days are your conference and the second 3 days are personal and you're doing other stuff. You can't deduct that whole trip. And your tax preparer doesn't know that you only did business 3 days and you played 3 days if you tell them that you went on a 6-day business trip. So you better be able to back that up if you're ever audited. Again, we're always trying to think ahead to be safe in an audit. There are, depending on if you're within the United States, outside of the United States, on a cruise or on land, there are all types of different rules of how much of travel you can include, but you want to make sure that you let your tax preparer know what actually happened, or you better make sure you do business every single day you're there. Meals are considered while you're away on business. And I didn't mention this, but I do want to say this because I know we have people across the country. These are all IRS rules. This is the same no matter what state you're in. Your state is going to differ, but what I'm giving you today is IRS rules that apply to everybody in the country. Meals are while you're away. That doesn't mean I'm out on a signing and I'm an hour away from home and I stop at McDonald's and now I get to write that off. You get to write it off if you go to a conference and you're staying there for 3 days and you go have meals while you're there, then you get to write those off, and it's 50%. You put it in your software, whatever bookkeeping software, as 100%, but when it goes into the tax return, only 50% counts. Or you can do meals that are eaten with a business partner, prospect, or some kind of business related conversation. My tip to you is, in your notes on the receipt somewhere, write who you had dinner with or who you had the meal with and what you talked about. And that way, if you're ever audited, you have that information right there. I went to dinner with Beth. We talked about Notary Stars and how we were going to do a new conference, next December. Whatever it is, you're going to put that on the receipt, and that way you never have to think about what happened on that date. Also, a lot of these bookkeeping softwares, you can scan receipts into them now and attach it to where it is on your bookkeeping software. You can throw away your original receipts. You do have to have a scanned copy, and it does have to be a receipt. It can't be a bank statement, right? If I see, Stater Brothers on your bank statement, I don't know if you bought groceries for your house or you bought snacks for a conference. The actual detailed receipt has to be included in all of these expenses. Mileage. This is a big one for us. You got to keep track. It's really important. This year, it is 67 cents per mile. Just so you know, you can do standard mileage or actual expenses. I'm sure you guys know this. Standard mileage is 67 cents per mile. It includes car washes, tires, gas, maintenance, keeping your car going, depreciation, leases. The only thing it doesn't include is parking and tolls related to business and your business portion of the interest on a car loan. So let's say your car is used 50% for works, 50% for personal. You could write off 50% of the interest on your business tax return. So you want to make sure you keep those receipts so that that's added to your mileage. Actual expenses is let's use the 50-50 example again, you're going to use 50% of all your expenses you're going to write off. Normally, standard mileage is better. Every once in a while, you'll have somebody who actual is better, and that's usually if you have like a really old car that needs a lot of service. If you have a gas guzzler that you're just like pouring gas into it, then actual expenses might be an issue or might be better for you. Not going to cover this a lot. I just want you to be aware the IRS is really picky as to what they want on a mileage tracker if you're ever audited. My suggestion to you would be look up these details of what is needed. If you ever audited, you're going to get notice. You're going to know ahead of time, and you're going to sit down and export your miles from whatever bookkeeping software you're using onto an Excel spreadsheet, and then you're going to make sure that you have all of these details, because I have seen many companies, big companies, have mileage disallowed because they didn't have all the details that were required to get through an audit. Also, always note your miles on January 1st and on December 31st. You should be putting that into your tax return. Pro tip in an audit, the IRS will go and hunt down your oil change receipts. They're public records. I didn't even know this until a couple years ago. So like, it's not Car Karma, but there's one of those sites. You can actually look up every oil change you've ever had, as long as you're going to like Pep Boys or dealership or whatever. And it says your mileage. So let's say you had an oil change in January at 10,000 miles and you had an oil change in December at 20,000 miles. That's 10,000 miles for the year. But you put on your taxes that you drove 20,000 miles. The IRS just caught you and they're going to disallow all your miles. So be aware that your numbers are matching what's on receipts and public records. All right, bookkeeping. So bookkeeping is defined as the ongoing recording and organization of the daily financial transactions of a business. Many people, actually, do you guys remember the old H&R Block commercials and the guy would come in with like bags and shoe boxes full of receipts? Most preparers won't do that anymore because that is the bookkeeping portion. That is what you are responsible for, or you hire a bookkeeper to do. When you come to tax season and you come to a tax preparer, we expect those numbers to already be in some kind of format and some kind of report that we can use to apply to a tax return to do your end of year report. So it is really important that you're paying attention and you know what's needed. If you're not going to hire a bookkeeper, you need to know the rules, or you need to know when to ask your tax preparer, I don't know the rules and I don't know if I did this right. Are you going to take a look at it? Because most tax preparers are going to get your your bookkeeping report, and they're going to go, okay, they knew what they were doing. They put it all in their software. You just told me you had $1,000 in advertising, you have $500 in gifts, and that's what I'm going to plug into this report. So it's not their job, unless they explicitly say it's their job, to go through each item and make sure you did it right. That is something that you need to have that conversation with your tax preparer. Most preparers will not do bookkeeping during tax season, so it's something to keep in mind. That's something you want to do right now. Something that I like to do that I think is a great way to make sure that you're accurate is I prove out, because I came from banking world before all of this, I prove out my signings to my software. So every couple of weeks, I'll sit down with my journal and I'll go through and make sure that I got all of my appointments into my bookkeeping software. And usually I miss 1 or 2 a month. So it's very helpful to go through and make sure that you got all your income in there. And then you should also go through your bank statements and compare that to your expenses and make sure that you didn't miss anything there either. All right. P.S. There is no guesswork allowed when doing taxes. I hear all the time, well, just put on my taxes whatever most notaries have for write-offs. That's not the way it works. I do have due diligence requirements as a paid tax preparer. I can lose my license for making up numbers on your tax return. They do have to be exact numbers. Really clear indication for me that you haven't done your bookkeeping is if you come in and say, I have $500 for advertising, I paid $1,000 for meals, if you have very round numbers like that, the real world doesn't work like that. I'm going to immediately know that you just guesstimated the numbers and threw it on my worksheet, and that's what you're trying to go with. And that puts both of us at risk for audit and for getting in trouble. So please really get into the habit of good bookkeeping so that you get to the end of the year and you don't hate tax season. There is a way to not hate tax season, I promise you. The next one is the 3 types of taxes that we pay as self-employed people. Federal taxes, your IRS taxes. Self-employment tax, which is Social Security and Medicare. Usually you would split this with an employer. If you were a W-2 employee, your employer would pay half, you would pay half. But because it's just you get to pay the full 15.3%. And then depending on your state, you might also have state taxes. 3 different types of taxes. Your notary income is not tax exempt. You do pay taxes on your notary income. You pay federal taxes you pay state taxes, and you may or may not pay self-employment tax. So let's look at that self-employment tax and how that works. This is based on California notarial fees. Again, the information I'm giving you is for the IRS, so it's across the country. However, this part is based on whatever is allowable in your state. So if your state only allows $2 per signature instead of $15 per signature, you need to replace this 15 with $2. Okay, it's whatever your state allows as a notary public, that's what you can write off. And the reason you can't just go through your journal and add up signatures is because it doesn't roll over. So for example, if I had a loan signing that's $100 fee and it had 4 signatures, the full $100 I'm going to pay federal and state taxes on, okay? But then I can subtract $60 for self-employment tax. So $60 is going to go on my Schedule C, but only the full $100 is going to go on my Schedule C, but only $40 I'm going to pay self-employment tax on. However, let's go over here before I move to that next thought. If you had the $100 fee and there were 10 signatures, you can't have a negative number. You can't take this $50 off of your next signing. It can only be up to that signing for that fee. So you would have a $100 fee. You're going to pay taxes on $100, but you may choose to exclude the full $100 from self-employment tax. You cannot carry the leftover $50 anywhere. It's just, you're just not paying tax, self-employment tax on this $100. So this is why counting in your journal does not work. And the other thing I want to say about this is, I'm going to go back. Self-employment tax, Social Security and Medicare. By choosing to exclude those fees from your self-employment tax, you are putting less money into the Social Security system, which could affect your Social Security when you go to retire. So it is not a catch-all, everybody should do it, let's all get rid of this self-employment tax. It's really a personal decision on whether or not you want to do that. This is just showing you, like, my bookkeeping software will split the fee up like this. This is my real software. I just did a screenshot. So let's say this one, I got $125 for this signing and $135 worth of signatures because there were 9 signatures. So that means 0 of it I'm reporting on the self-employment tax schedule. There's another attachment that goes on there to calculate the self-employment tax. However, this one, I got paid $175. There was only 1 signature for $15. So $160 of it was printing and traveling and all the other stuff for being a signing agent. And I have to pay self-employment tax on that. Okay, so we know who's responsible for keeping track of all this. We know we have an idea of what kinds of things we can write off. The other thing that really affects us as business owners is that nobody takes taxes out of our check to pay our taxes throughout the year. And newsflash, the IRS, they don't want their money in April. They want their money throughout the year. They are not going to be happy with you if you wait until April 15th and you make a $10,000 payment. Not only will they not be happy with you, they will charge you penalties. And so one of the big things that you need to be aware of, and not all tax preparers are going to do this, or they may not catch it because you might have only made $10,000 last year, but this year you made $100,000. You need to be making estimated tax payments, or possibly need to be making these payments. There is a you get the first year free. So like the first year that you do really well and you owe over $1,000, they're not going to charge you a penalty. But after that, once you owe more than $1,000 2 years in a row, they're going to start charging you penalties. So anybody who expects to owe over $1,000 at the end of the year needs to make estimated payments. They are not regular quarters. It's not like March, June, September, and December. It's weird months, so you have to look it up. The first one is actually due in April. So right when you're paying your taxes for this year, you have to make your first estimated payment for the next year. California, just so you know, if you're going to owe more than $500, it's the same thing. You have to make estimated payments to the state of California. So you should always try and pay 100% of whatever your tax liability was last year. You just split it into 4 and make those payments. As long as you've paid 100% of what you owed, not what you owed, your tax liability, because maybe you had money taken out of your check somehow, then you're good and you won't have penalties. And it's 110% if you make more than 150,000 a year. The taxes, I mean, the penalties can be pretty high, 5 to 25%, depending on how far behind you are. So just keep that in mind, that that's a big deal. Your tax preparer can help you, or there is also this tool on the IRS website. You can just Google IRS withholding calculator. Remember that taxes with your spouse, you are one and it all comes together. So if you're married or if you have a W-2 job, you need to have everybody's income available when you go sit down to do this tool. And it will actually tell you, like, okay, we estimate that you're going to be underpaid $8,444. What you can do is have your spouse take an extra $500 per pay period out of their check, and they're going to cover your taxes. It'll play with it like that and explain it to you in that way. Or you do a planning session with your tax preparer. I do see there's a lot of stuff in the chat, and I do see hands raised. I'm going to go all the way through and then we'll come back to questions, just so if anybody needs to go for the night, then we'll get them through the information. All right, so how do you pick a tax preparer? Well, the first thing you need to know is what types of tax preparers are there. Most of you have probably never heard of an enrolled agent. That is what I am. An enrolled agent is literally somebody who studies tax law, and then we go and take 3 exams. They are pretty darn hard. I have held a realtor's license. I have held many licenses in my lifetime, and that was probably the scariest test I've ever taken, but I did pass on the first try. So there's the individual part, there's the corporation part, and then there's the ethics part. So enrolled agents are strictly tax people. There's also registered tax preparers. I think they do 40 or 60 hours to start, and then they have to do 20 hours of education every year after that to maintain their license. And then there are CPAs, which most people think of to do their taxes. A reminder that CPAs are accounting people and they don't necessarily do taxes. So you might call 20 CPAs and only one actually does taxes. None of these certifications is better than another. It's the experience that they have and the effort that they've put into taxes, right? So I would never knock any of these, because there are some registered tax preparers that have been in business for 30 years and they could run circles around me. So, and there are some CPAs that have never done taxes in their life. But I want you to know that there's these different designations that exist. Some things to think about when you are picking a tax preparer. A lot of us have gone to virtual. Does virtual work for you? Do you want somebody who's live? Their availability in the in-season versus the off-season. Many tax preparers kind of close up shop and they're gone during the off-season. So you want to make sure you're okay with that, or that you get somebody who has availability during the off-season. Something I highly suggest is, do they walk you through your taxes? A ton of tax preparers, you fill out their binder, you send it in, and then they send you a tax return that you sign and it's done. Well, how do you know if they lied on your tax return? Because I will tell you something, you are signing under penalty of perjury that the information in your tax return is true and correct. So maybe the tax preparer is going to get in trouble with you, but you're still going to be held accountable for the information in that tax return. So I require my clients to go through the tax return with me. If they've been with me for many years and I've taught them how to read the tax return at this point, then I'll let them get away with it if we can't get a good time. But I do make my clients go through the tax return and make sure everything looks groovy, at least for 10 minutes, and just kind of look it over. Responsiveness. Don't think your tax preparer is going to be like a notary. Us in the notary world, we're used to, if you didn't answer my phone call, you're not a very good notary and we're going to move on. Tax preparers don't work that way. 1 or 2 business days in tax season, it might be 3 or 4 business days, because they are slammed. So, and then the rest of it is really just to think about what their process is like. Are they keeping your information safe? Of course, the fees. Remember, cheaper isn't better. Document deadlines. Most of us have a deadline that you need to get your documents in to guarantee that we'll get it done by the deadline for taxes. And remember that the extension, a lot of us use extensions, that only gets you out of the penalty to file, not the penalty to pay. So if you owe money and you go past April 15th and you don't do your taxes until July, you won't get a penalty for not filing. But if you owe money, you're going to get a penalty for not paying on time. These are some publications that you could read through as a small business owner. Publications are the IRS's plain English interpretation of tax law. So these are really good ones as far as tax guides for small businesses and knowing what you can and can't write off. I'm not against Google as long as you actually know that that's a good website. Please don't use TikTok. TikTok is not law. You don't just create a business and start writing off your personal expenses. Yeah, it may work until you get caught. And then when you get caught, you're going to pay all kinds of penalties and all kinds of interest, and it's going to be really ugly. I also threw up the California estimated tax info here. Your state may have something like this, but just like the IRS, you can kind of plug in your income numbers for the year and see how much you're expected to owe for California. What you can do now to prepare for tax season, read one of those IRS publications or hire a bookkeeper, whatever works for you, but you need to know the information. Add your extra mileage. If you are using any bookkeeping software, there's a spot usually to add extra mileage. So like if you went to a conference, that's not going to pop up because it's only tracking your signings. Create a separate exclusive office space. I didn't talk about mileage a lot, but one of the things you want to think of is where is your business home? If you don't have an exclusive space, that doesn't mean a whole room. It may just be a desk in the kitchen. But if you don't have an exclusive space for your business at home, that's not your business home, which means mileage to your first appointment in the morning and your last appointment home at night does not count. You can't count it unless your home is your office. So really easy fix to that, create an office. Exclusive office space for your business in your home will fix all your mileage problems and make it so that everything is deductible.
Samantha, you're talking about a dedicated space. We're not talking about the dining room table or a corner in the kitchen, right?
It can be a corner in the kitchen. It can be the dining room table as long as you don't use that dining room table for personal use. So if it's just your house and you use the kitchen table and nobody else uses that kitchen table and that's where your exclusive business space is, that's absolutely fine.
Perfect.
Exclusive is important. Investigate retirement accounts that reduce tax liability. Way too much for me to talk about, but you can actually bring down your taxes by putting money into a traditional IRA or an HSA account or a simple account. So that's definitely something to look into. And start finding a preparer now. I will mention that it's something like 75% of our tax preparers are supposed to be retiring within like the next 5 years. And the new people don't want to work in taxes because it's hard and it changes every year. So there is actually there's going to be a very large shortage in tax preparers in the coming decades. So it's just something to think about, that you want to find somebody that you trust and work well with now, so that you can continue on that relationship.
Well, you have gone through such a smooth presentation here. I didn't want to interrupt you, Samantha. So I've been collecting some questions out of the chat to go over with you. And guys, if you have a question that you want to ask Samantha while we're here tonight, please get your virtual hands raised and ready to ask your questions. And Samantha, it looks like you're finished, except for you got a little promo code you want to talk about. Is that right?
I just threw up a promo code if you are looking for a tax preparer and wanted me to help you. Stars 2024, you just have to tell me that when you call now or in January to schedule. I do some tax planning, like if it's overwhelming to figure out if you're going to owe next year, we can do sessions on that as well. So there's my contact information, and I gave that promo code to get your 2023 taxes done.
And Miss Samantha, I just want to tell everybody before we start going into gallery view and you start answering questions, take a moment, everybody, and just take your phone out of your pocket, off the side of the table, take a picture of the screen right now so that you know exactly what you need to do and who you get in contact with. Make sure it's focused because screen to screen sometimes creates a little bit of grain there, but you want to take a picture. Now, we are recording this. It'll be on our YouTube channel so you can find it. But we want to make sure you have Miss Samantha's information and that promo code as well. So just take a moment and do that. What do you call it? Screenshot or however you want to do it. Photo. Miss Beth, we do actually have the winner from here tonight. Before we start,
awesome.
Before we start going into questions, Miss Samantha, do you mind unsharing your screen?
I absolutely can.
Then we'll go into gallery mode, and I just want to bring Miss Valerie up really quick so we can give her a proper congratulations. Since we're going to turn on our cameras anyway, to thank Miss Samantha for everything she did. while we're going into gallery view, so that we can bring Miss Valerie up. So I'm going to bring pin Miss Valerie up. Miss Valerie, how do you feel about? And let me make sure you can unmute yourself there. And just remember, this is being recorded because I know what you said to me when I called you. Let's see. Gotta do the ask. Can you ask her to unmute, Miss Beth?
I am not able to while she's pinned. You may have to unpin her.
All right, hold on. Let me do this and then let's find.
There you go. Try now, Val.
There we go.
All right, yes. How do you feel about winning $1,000?
Yoo-hoo! Thank you so much. Yeah, that was a really nice phone call to receive, Ronnie. Thank you very much.
I'm so happy, and thank you for participating in the contest. And I called her while we were doing this presentation, and I won't tell you what she said, but let's just say if you won $1,000, you might say it too. I'm so happy, and by the way, I wanted to thank you for the work that you've done also at Unlimited Ink, not just what you've done for Notary Stars or what you do with us, but thank you for what you've done at Unlimited Ink as well. Thank you for your service that you've provided my company. So I really appreciate you.
You're welcome. It's a pleasure doing business with you. I love your company. They're very straightforward and easy to work with and available with any questions. They get right back to you. I'm sure other people here on the call can substantiate that. So I want to thank you for that. It's really nice to have that backbone. I'm grateful for that as well.
Thank you, and I can't wait to send you a check for $1,000.
Congratulations. That's cool.
Thank you. Thank you, everybody. Thank you.
All right, everybody, let's give Miss Valerie a nice wave. I'm going to turn on that gallery view. Let's give her a nice wave. Congratulate her on winning $1,000. And remember, guys, we have that contest coming up this next quarter for your kids to win a nice cash prize for Christmas. So you want to get those drawings in. Now let's start taking questions. Miss Beth, I know we had some from Jotform, and then we also have hands raised in the gallery. So I'm going to let you choose how we should proceed with questions at this point.
Well, actually, a couple of the Jotform questions I think got answered handily. We're talking about taxes being paid quarterly, I think Samantha said. And this notary, Samantha just wanted to know, can you pay quarterly, biannually, or annually? And I think you mentioned that it should probably be done on that quarterly basis, right?
It's quarterly. There are lots of rules around it of how we can play with it. If you make more money during the summer, you would pay more during the summer and less in the first quarter, but it can get really complicated. The easiest way is to do that 100% and divide it by 4. you would not get penalties as long as you're paid up by the time tax season rolls around, unless you get audited. Then they could go back and say, oh, you didn't do the first installment by the due date. So you always want to try and hit the due dates. And I believe, if I know off the top of my head, I believe they're April, June, September, and January. But you can easily look that up on the IRS website, and it's just the IRS. Like, they're not going to make it easy and just quarterly and every 3 months. It's
Of course not. Of course. The next one comes from Martha. Her question was also a jot form. So when we say jot form, Samantha, we're talking about pre-submitted before the webinar. Okay. And this one says, it's from Martha G. At what age can I add my kids, ages 10 and 13, to my business? And at what rate? Also, it's two-part. Also, yep. How much do I need to bring in monthly to add them to payroll?
Okay. No limit. You don't have to have a certain limit to bring them on payroll. The fee you pay them needs to be reasonably. This is not, as some TikToker, I'm going to harp on TikTok because we get it all the time. But as TikTok would like you to believe, you should just like give your kids allowance money and write it off on your business. That's not what it is. And it is a big red flag. So you better be able to back it up. I hired my oldest at 14 or 15, and she did some high level work for me. So I think I paid her 21 an hour, and that was like 4 years ago. But I mean, she was doing my marketing. She was calling people. She was writing handwritten thank you notes. She did a lot of work for me. And so I created a time card where she actually wrote down her times and wrote down what activities she did that day. She had a job description. And then you have to issue them a W-2 at the end of the year. The only thing you're saving is you don't have to do all the payroll taxes. I have a 9 and 10-year-old right now, and they probably started working for me at 3 and 5, and they shred papers and they come and organize a drawer for me. They probably work 10 hours a year, but it's a good responsibility thing. I could get them to work a little bit more, and I pay them minimum wage because they're doing minimum wage jobs. I will say that if you look at my website, there is a little hand with my notary stamp, and that's my picture on my website. That was my son when he was like 4. And I think I paid him $300 for the photo shoot. So as a model, I was able to pay him a lot more than I would pay him for shredding paperwork. So it depends on the job. You should have time cards to back it up. You should have a job description to back it up. And you do have to issue them a W-2 at the end of the year. Once they turn 18, you add some payroll taxes, but not all of them. So it's still kind of beneficial. Mine went off to college and didn't want to work for me anymore. And I don't want to hire anybody else because she knew how I liked everything. She would come back.
That's awesome. Perfect. So I got a quick question for you. So I am a Chapter S Corp. I have 2 vehicles. I use one solely for business. That vehicle is 100% owned by the company, 100% expensed to the company, including, maintenance. I pay myself payroll. And I've been in business for 21 years. I don't pay quarterly taxes. But most years I show a loss on my tax returns. God forbid my company ever needs a loan. I will never qualify for a business loan because of that. But I'm so strategic. I make very little profit into my company.
That's good.
Planned that way. I'm either taking it in payroll when I know I'm making more money or some other expense. That's not a red flag for me, is it?
No. And remember that the rules we are talking about are sole proprietor and partnership. And I didn't give you this term, but I'll give you a term. We are pass-through entities. Yes. Anything our business makes goes on our tax return, whether it's sitting in your bank account or you use the money, it doesn't matter. Whatever you make minus write-offs, that's your income. There's no leftovers. what Beth is talking about, in a corporation, you actually separate yourself from the business. So Beth, your income is actually your W-2. You're paying yourself wages. So if you
Yes.
went and applied for a house loan, you still have wages because you have a W-2 from your business. Your
Right.
business is separate from the person. For sole proprietors and partnerships, there is no separation of person and business. We are one and the same.
Yeah, and at Chapter S or sub
S corp,
also kind of bypasses that double taxation thing.
it does. So a C corporation, if you create McDonald's get taxed on their income, and then they pay their employee, and their employee gets taxed on the income. There's double taxation for a C corp. S corp is actually a special election you make, and it's a pass-through entity. So instead of the S corp getting taxed, you pay yourself, but you still get taxed on anything that's left over. Anything that wasn't written off, you're getting taxed on all of it, but it still separates, number one, the liability, and then number two, the taxation. You can still show income because you have that W-2 coming in.
Perfect. Yeah.
Miss
Well,
Beth, I just
because
want
I've been doing that for 21 years. Thank goodness, huh? Make the sign of the cross
Yep.
for protection here.
Miss Beth, I just want to say something too. So I'm the realist of everyone, and I just gotta say we do this for a reason. We bring in professionals. Do as I say, not as I do. The last thing that you want to do is get a letter from the IRS. And I have gotten them, and I've had to remedy them. And I have Travis, three ladies at a nice company called Better Things, and Hannah, Christine, and Apple all doing my books now. Now I'm a pretty large company at this point, so there's a lot of in and out, so I have to manage everything. But it scared me to death, that first letter that showed, and I ignored it the first time. That first letter that showed up from the IRS going, "We need to talk to you." And I was like, I don't want to talk to you. You don't want that happening. And one of the biggest mistakes that I made early on as I started making money, and Miss Samantha covered this tonight, so I want to make sure to reiterate that. I thought I was just going to write off every dinner that I did. If I went to lunch with you and I, was buying for business, and it's not like that. So you are being misled when someone tells you you can just write off dinner and you go out to this fabulous dinner trying to get your clients, which I did. And it kind of worked, but then it bit me in the butt on the other side. You have to, and this is why I say you need a resume, not cookies, to be able to like get clients, because I learned things the hard way. So there's a reason why we have these sessions. So I'm glad that you touched on that tonight, Miss Samantha. The one thing that I want to make sure, and I stepped away to let Miss Valerie know that she won. I do have a question, and then I want to get to all the other questions. Credit card interest. Have you covered that tonight, or did I miss that? If you
did, but we can. First, I want to say, if you get in here, we'll get a letter from the IRS at some point. I'm just going to throw that out there. There is no way to prevent it. There are red flags. There are things that put you up further on the totem pole, but it's also completely random, and all of us are going to get it at some point in time. Don't freak out. Don't ignore it. You need to send it to your, because we get, in notary world, we're very now. We got to figure it out now, because everything is very fast paced. Tax world is not like that. There are no emergencies in taxes. There is a deadline. There is time to figure it out. Send it to your tax preparer, give them a couple days to read it and figure it out, and they'll get back to you and let you know what the next step is. Some of them are as easy as sending birth certificates for your kids. Literally read the notice. It will tell you what they're asking you for. And sometimes it's just prove these are your kids and you're not claiming the neighbor's kids because they don't do their taxes, because that happens. Interest on a credit card. If it is exclusive for business, absolutely that is a write-off. If you are commingling personal and business funds, it gets trickier. Yes, you can do a percentage, or we can figure out the numbers. But you should, at this point, you guys are all educated, you're on these calls, get a business bank account, get a business card, keep your business and personal separate. Because we are pass-through entities, there is no requirement, but you're practicing for if you grow and turn into an LLC or a corporation. If you are an LLC or a corporation and you mixed funds, you are now doing what's called piercing the corporate veil. As soon as you mix personal and business funds, you lose your protection as a corporation. So practice now as partnerships, practice now as sole proprietors so that you don't mess up if you ever become an LLC or a corporation. And it's really just cleaner if you ever need to show something for an audit.
Perfect. All righty, let's go ahead. We've got 6 hands up in the gallery, Samantha. We're going to start taking those questions. And guys, we're already running over. It's 7:04 now. So when you are asking your questions, try to formulate them in as close-knit, succinct, direct question as you can get out of your brain. Not like me, I'm all over the place, but here we go. David, will you want to unmute and ask your question?
Yes, I work for an online notary center, and I was told because all I do is notarizations, I do not have to pay a self-employment tax on that because I get paid $5 a stamp. So at the end of the month, let's say they send me a 1099, well, it'll be the end of the year, but it's if I'm making $1,000 a month, it's strictly notarization stamps. So I shouldn't have to pay self-employment tax on that.
Correct. Self-employment tax.
I thought I understood it right.
Yeah.
In addition, because I don't think I'm doing anything wrong, what I've been doing, just to be on the safe side, is I've been taking 25% of my monthly earnings and making an online deposit at an estimated tax. Nothing wrong with paying too much, right? This way I don't have to worry about it. At the end of the year, if I pay too much, great, I got a refund. But that's what I started doing. So if I make $1,000 every month, I'm sending them $250 as a 2024 estimated tax. So I'll be okay with that, right?
Yeah, it's really hard to do percentages because it's going to depend on do you have any other income? Do you have kids? Are you married?
Well,
do they
I get
have
Social Security.
But yeah, if you're going straight, I think you're fine. And yet, no, there is no problem with overpaying.
Yeah, right. That's what I was going to say. If I decide, I do it monthly so I don't forget.
And actually, if they take too long to refund you for any reason, they'll pay you interest. So you just got interest on your money.
Most of the time I get a refund because I rather overpay. I think of it as a little bank account at the end of the year. If something happens, better to pay too much than too little. I always figure that.
Yeah, very good.
All right, great. Thanks.
You can use your refund, David, then to pay your credit card bills from Christmas, right? Okay. All righty. Thank you. Thank you so much. Have now. Would you like to unmute and ask your question? Oh, I can't hear you.
Muted, and then it went back.
There we go.
There you go.
So I have a question. I'm in Florida and, Sunshine State, everybody's from where I'm specifically at. I'm seeing a lot of hybrids and solar cars, electric vehicles, things like that. How would that work with mileage and gas? Would you just take a standard fee at that point? Regardless if you're using gas or not?
Nope, no change in mileage, and any credits is going to be a personal deduction, not something on your Schedule C. So like, if there's a credit for having an electric vehicle, that would be a personal thing, not a business thing. But there's no change to the mileage. They still give us the same mileage credit.
Okay, something to look forward to on my next vehicle.
Yay.
Thank you.
Absolutely.
That's a great question. All righty, moving right along. Elizabeth Bergman, would you like to unmute and ask your question? There you are.
I did. Hello. Thank you for your talk. I'm just starting out, and so all my expenses are in 2024, but I probably won't make enough to cover those. So do I just hold off like claiming that until 2025?
You can never roll what happened in one year to another year. It has to be reported the year it happened. And as a self-employed person, cash income, you are required to file taxes if you made more than $400. So, usually if it's a regular W-2 job, it's up to like 13,000 or depending on your filing status. It could be higher, but as a self-employed person, as soon as you make $400, you are required to do taxes. And so whatever you made this year and whatever expenses you had this year, that's what you're going to put on there. The thing you can do is elongate your depreciation. So I didn't talk a lot about depreciation, but like computers and cars and things that last longer, you can pull that out over 5, 7, 10 years. If I made a lot of money, I might do special deductions to take all my depreciation. But if you didn't make a lot of money that year, you're only going to take a little percentage of it and you're going to leave it for next year to take the rest.
Definitely a good idea. Yeah. If you didn't make enough money to be able to take advantage of your full deductions, then take a small percentage and then write the rest off or use another percentage next year. Perfect. All right.
Yeah, but never ignore things that happened this year thinking you can just throw it on the next year, because you can't overlap like that.
Right. Or you can't cook the books. Samantha, come on.
Well, it would be so much easier.
Yeah, we can't manipulate numbers, guys. Whatever it is, it is. We have to stay within regulations on what you can do. Tiffany, thanks so much for raising your hand. You want to unmute and ask your question?
And then Miss Tiffany, before you go, I just want to go ahead and call it for tonight. We have up to Miss Affy, and I'm glad that she'll be the last question because I want to bring something up with her as well. If we could just let everybody know after the 1, 2, 3, 4, 5, 6 hands that are up, that'll be the end of the questions. But we have been dropping Samantha's information into the chat for the night. So please make sure that you're copying that, Kirsten. Make sure to drill it home with her contact information. And Miss Tiffany, take it away.
Okay. Hi, I'm Tiffany. I'm from Detroit, Michigan. And I think she, like the last person, just pretty much asked the same question that I had as far as I do this part-time. So I didn't make like any money my first year. I might have had like two entries in my journal, period. And then this is like my first full year operating. So if I don't make a lot of money, I was just wondering, like, what was the cutoff or a standpoint where you had to start to actually file taxes if you didn't make any money?
Legally, once you have to file taxes, you have to include everything. So last year, let's say you made $20, but you had a W-2 job, so you had a requirement to do your taxes. By law, you had to include that $20 on your taxes. Is it going to change your taxes to a point that you would get in trouble? Probably not. But if I went by the letter of the law, yes, you should go back and amend your taxes. But if it doesn't make a difference, if you wouldn't have owed more taxes, then you wouldn't get in trouble for it in an audit.
Okay.
But you're not going to add it to this year. You're just going to move on to this year.
Okay. So I just basically really just start with this year.
Yeah.
So I've also learned that I'm improperly function as a Schedule C versus court.
You're improperly doing that?
Well, I went to my tax preparer when I first got started and asked him, like, I don't know what I'm doing. I just know I want to start a notary business or whatever. And he signed me up as a C Corp. And so
you're going to need to go back and talk to them because you may have had filing requirements for that C Corp last year that you could have issues with. Because now the C Corp hasn't done their taxes. So yeah, you're going to need to follow up on that more. You don't need a corporation to do business. I know a lot of people want to tell you that you do, but you don't. That's why we have error and emissions, and that's why I have $1 million in error and emissions. I may go up to $2 million pretty soon because I'm in California and houses are expensive. But I would rely on the errors and emissions before I would open a corporation, unless you're like Ronnie running multiple businesses and the income's getting up there. Then you might want to look at separating it.
So what do I do now at this point?
You can, well, I don't know, because it would be too particular to you, but you want to talk to whoever set you up or talk to a business advisor. You probably could close down the C Corp and just work as a sole proprietor.
So can I keep my name though?
If you register as a DBA, a doing business as with the county. So you can have a business name without being a corporation. I'm the paperwork and errand lady. I don't have a corporation. You just register as a DBA with the county.
Okay.
SBA and SCORE are two great resources to learn more about business structures as well.
You said who?
SBA, the Small Business Administration.
Mhm.
And under SBA, they have something called SCORE, where they usually they match retired business owners or business people as mentors to people who are starting out.
Thank you.
You're welcome.
Oh,
That's
awesome.
a good, I'm sorry, go ahead, Tiffany.
Awesome presentation, by the way.
Thank you.
Thank you for reminding me of SCORE, Samantha. We had SCORE as a guest probably 4 years ago here on Notary Stars. We need to probably do that again before the end of the year, just to help out that portion of the information kind of gathering here. Good idea.
I like to say SCORE mentors are like therapists. You have to try many different ones until you find one you click with. You might not get the best one at the beginning because they're just people donating their time, but you'll find one, you know, every once in a while, you'll find one that just is on it.
Awesome. Awesome.
Miss Beth, I just want to let everybody know I'm dropping in the chat. We have a partner for BOI reporting for the upcoming year, which is Fence and Guidance, and they've given Notary Stars a really nice rate if you need to do it. I know there's people charging, you know, hundreds of dollars for something that's very, very easy. They've given Notary Stars a very, very, very special rate if you need to do your reporting. So I dropped that in the chat because I think it's appropriate for tonight as well.
Beautiful. And I don't do BOI. So if you call me for that, please get this information because I don't do corporate taxes. I only do individual taxes.
And then Miss Samantha, I just want to pull this out of this rabbit out of the hat really quick as well before we get these last few hands that are up. I look back at my time as a notary, and now I've moved into becoming a notary signing service. I honestly don't believe that an individual notary making less than, you know, $100,000 a year has any reason to file an LLC in my mind.
Not in California for sure, because it's $800 a year off the bat just to keep your LLC.
Yeah, and there's, you know, you have the same protections legally. I mean, you're the one that they're going to go after ultimately if something goes wrong. You need to have your insurances in place before you have an LLC. But I felt like I did it in California. It cost me a lot of money, and I really didn't need it until I got to this level of business. Now, if your goal is to become a signing service, maybe, but I've always been a single member LLC. And I look back, and until I had a partner, I really didn't see the need. Now, Travis is trying to move us more into corporation because we're a bigger company now. But I look back and I think, God, I just started all that and paid a lot more money for nothing. And would you say that I'm right about that, or am I wrong? Or
I agree 100%. Again, I'm not an attorney, but in my opinion, you know, it has to make sense. And if you're gonna move towards a corporation, there are some preparers out there. Ooh, Hemet representing, I saw your chat. I'm in Hemet, California. But preparers actually have software where they can drop your numbers into it and compare a sole proprietor to an S Corp to a C Corp, and they can see if your income and your situation would make sense to move over to these other company structures. I agree with you. I mean, if you're not even close to 100 grand a year, I don't see the purpose. And I really, truly, after all my legal classes to become a legal document assistant and my tax law classes, I don't think that the LLC protection would be there for me if I ever needed it, because the business is based on my knowledge and me not being neglectful. So I would rather invest in extra E&O or umbrella policies or whatever. I hate insurance, but I would rather invest in insurance than invest in starting a company and having to have like articles of incorporation and board meetings. And I don't want to do all that stuff. It's just me. I don't need all that.
I appreciate you for backing me up in a sense on that, because it was a lesson I learned the hard way. And sometimes that's the best lesson to teach other people. Miss Isa, we are ready for your question when you are ready.
Hello, everybody. Thank you, Notary Stars, for night evenings like this. And thank you, Samantha. That was great. I enjoyed that very much. I'm in Florida, so $10 per stamp is my number. But it seems that every time I tell a tax preparer or a bookkeeper or somebody, they don't understand what I'm telling them. What is the best way to tell them that I'm, as a notary, I get these $10 per stamp that I don't pay taxes on?
So there's over 7 million words in tax law. Just throwing it out there. That doesn't make your tax preparer a bad tax preparer. It may make them not the right preparer for you unless they're willing to do the investigation. We honestly read and investigate all the time. Every year I get 3 or 4 people that come at me with something new, and I have to go read a book and learn how to do whatever they're bringing me to do. Notary is no different. I believe it's listed under state clergy somewhere in the tax law. We are a state official. That is why we don't pay taxes. It may not be listed in the IRS tax code as notary public. Although if they do a quick Google search, notary publics don't pay self-employment tax, it'll pull up on many websites. But so many people, many preparers are so against using Google and then backing that information up that they just ignore Google. So I believe it's somewhere in the tax law under like state clergy or a state employee, and that's what the tax code is that allows us to exclude our notary stamps or our notary signatures, depending on your state. So if they're willing to investigate, I would ask them to investigate and know the law really well, because they do have to exempt it. You like put all the income on Schedule C, and then you exempt it on Schedule SE, which is the self-employment tax schedule. And that actually causes notices from the IRS pretty regularly. I get them every year now, because now they're watching me, and so now they're like sending it to me. And it's just a matter of sending the IRS, here's the tax code that says I get to exclude this. But you may get letters because of that. And that's not because your tax preparer doesn't know what they're doing. It's just the IRS half the time doesn't know what they're doing. And so we have to educate the IRS.
So on my end, I just send them, this is the number, my number of stamps that I did, or the dollar amount, and then they put it there as an expense, and that's it.
It's not an expense because it's not taking it off of your income. It's actually, and this is why I really, really, really promote not necessarily any notary bookkeeping software, but a notary bookkeeping software, Notary Assist, Notary Gadget. I think there's another one, Ronnie, that you mentioned. Closewise. I just met those guys. So, using one of the notary softwares is going to give you that piece where you can put in, and that's part of that prove out process I was talking about. As you're going through your journal and making sure all your signings are in your software, you're also adding how many signatures per signing, and then the software figures it out for you. And it says, this was your income, and this is how much is subject to self-employment tax.
And that's what I'm using, Notary Gadget, and I have the journal portion of it with it as well. So very easily I enter the documents and how many, signatures or stamps and all that, and it's all put together. Okay, so it's just a matter that they'll just have to go look for it. And so when I'm checking whether they did it or not, where do I look for it on the tax return?
Schedule SE.
SE, okay.
We'll see there's a line item that'll have like either typed in. If nothing is in there, get them to make their software type it in. It should say exempt notary income or notary exempt something. Because on the form, it just looks like all of a sudden you change the numbers. There's no deduction. It's just like, I made 60,000, but I'm only paying self-employment tax on 30,000. And then the IRS is like, why? What are you doing? So it's extra wording that the software actually has to put in. And I had a software many years ago that didn't put it in, and it caused me a lot of issues, and I had to deal with a lot of letters.
Okay, so exempt notary income is how we would label it.
Schedule SE.
Okay.
And you'll notice, if you're making $60,000, $70,000 a year, even 40, 50, it's a difference of $5,000, $6,000, $7,000. It's a huge difference.
Yes. All right. Great. Thank you again.
You're welcome.
Perfect. So we're getting some people just.
Oh, go ahead.
I was just going to say, we're getting some people who are just going cross-eyed. We've got about half of where we started, still on the call now. So I don't know. Do we want to take our last three, Mr. Mickle, and forget the rest of the questions on our jot forms? How do we want to handle this? We
Well, I
need
think
to
a lot
have
of
Samantha come back. That's what we need to do.
there may be a follow-up session in the future. I mean, Samantha's done really wonderful tonight, and I would love to have her come back. I do want to ask Effie to skip the line for one reason, because Effie actually just recently purchased marketing from Notary Stars. She's purchased her resume, she's purchased her website. Miss Isa actually purchased a website for me last year. And I want to remind people, and I want Miss Samantha to back me up for this, when you purchase like marketing services, two things actually, Miss Samantha. For those that invest in like, so I have a separate company, My Business Marketing Coach, which builds the websites for the students that decide that they can't do it themselves, or they don't have time to do it themselves, or they want extra help. That is a separate company. It's not owned by Unlimited Ink at all. It's actually a whole LLC on its own. When we send them those receipts, number one, the first question is they can apply that toward tax write-offs, if I'm not mistaken. And then also for all of the students at Notary Stars, when they invest in training, they can put that toward tax write-offs as well, correct?
Absolutely. So if you're hiring somebody to do your website, that's an advertising expense. If you're hiring somebody, if you're doing a monthly membership, that's a training expense. Absolutely.
Okay. All right. I'm going to have Miss Effie, just because I had spotlighted her, to go ahead and ask your question.
Good evening, and Samantha, thank you so much. A lot of really useful information. This is why people like us, love Notary Stars, for bringing, folks like you to educate us. My question is actually, it's a quick one. You said something about piercing the corporate veil. I want to be clear. Is it only when you said co-mingling? I mean, I'm a startup. I am not making any money, but I'm spending a lot. And that expense is from my personal account. So is that okay? Go ahead.
So you can't pierce a corporate veil if you're not a corporation.
Okay.
So, if you are a sole proprietor or a partnership, there is no such thing as commingling funds, because you and your business are one and the same.
Okay.
It does take a minute, Effie. It probably took me a year or two to get my business account to start paying myself a salary. Even though it doesn't count for tax purposes, I get paid the same number of dollars every Friday, every week, all year long, because I have bills to pay, whether it's a good month or a bad month. And so I set up my business that way, so that when I do have a bad month, or when I break my foot, like I did in March, and I'm off of work for 2 months, I try to have enough money in my business account that I continue to get a check no matter what. And that number is going to be different for everybody. But I highly encourage to set up a separate bank account for your business, and to set yourself up like a business, and to give yourself a salary. It's going to start out at $200 a week, so you can build up your company balance. And then maybe, you have a great month. I used to give myself bonuses all the time, because it made me happy that I worked hard.
There is not $100 a week, and that's going to start. That's probably going to.
I'm sure I started right about there at $100 a week. I now, I don't mind sharing numbers, so I'll throw it out. I now get paid $1,500 every Friday, no matter what. If I work that week, or if I was on vacation, I get the same amount of money.
Okay.
And then I get, you can get bonuses if you do a really good month, like in tax season, when I'm doing really well. I can give myself a little bonus, as long as I'm leaving some for the business.
Okay. So as far as, mine's an LLC. So most of the expenses, from my personal account, but the income still goes into my business account.
Yeah. So LLC, you are technically, you're right on the edge of having that. You want that LLC to protect you because you did it. So a better way might be giving yourself a loan into your business account, do enough to cover you for the next however many months, until you think you're going to start getting some income going, or getting a loan as a business. When I started out, I got a micro loan from, I think it's called Action. It was a Spanish name. It was ACCION something. And I got like a $10,000 business loan and I threw it in my business account just so I had money to continue to give myself a salary so that I always had income, whether I got paid or not. And then I wasn't like hounding people to pay me right away. So there's other ways to do it. I would try to stop using your personal account for expenses because you want to keep everything. If you're an LLC, you want to keep everything in that one place.
Okay. Okay. Thank you so much. I do like the idea of giving the business a loan. Yeah, I think that's it. Yeah. Thank you very much.
You're welcome.
Thank you very much.
Good advice. That's exactly what I did when I started Effie. I gave myself a loan and I had to put it in there as a loan, and my business had to pay me monthly payments on that loan plus interest. That was the cool part. I made some interest. Okay. Gloria, thanks for being so patient, guys. We got Gloria and Erica left with their hands up. Let's go ahead and get those answered. Gloria, go ahead and ask your question.
Thank you, Samantha. Great presentation. I am a sole proprietor. I have my own business account, but because I'm a sole proprietor, I don't keep my expenses quite separately. And I do pay a lot of my expenses out of my other income from my secular work. But my question was, I was under the impression that there's a tax law, federal tax law, that said that you could not use money or in your business for 3 straight years. For only 3 years. After that, you're required to turn a profit. Is that correct, or am I misunderstanding that? And then I just wanted to ask Ronnie really quick, if you're listening, the BOI, is that even required for someone who's just a sole proprietor and is not an LLC? Those were my 2 questions.
I can answer that for you. No, BOI is not required for sole proprietor. It's a corporate thing. I believe LLC and then S Corp and C Corps. What you're talking about is a business versus a hobby. So that's a very loose definition. That's kind of what we use as a rule of thumb, but it's a lot more complicated. If you have a loss more than 3 years, within 5 years, we sit down and we look at the hobby rules. So one of the things for owning a business is your goal has to be to make income. It can't just be for fun. But there's other rules that are with that. So, what if I was a karaoke jockey? Does anybody know what that is? Does anybody karaoke? So it's like a DJ, but they do karaoke. So if I was a KJ and I went to bars every night to host karaoke and I never made a profit, the IRS is going to say, is that really to make money, or are you wanting to pay for your hobby to go out and do karaoke? Okay, so there is an element that they look at. I think there's 7 elements. I haven't done hobby in a while, but there's like 7 things that they look at. One of them is how fun is it? How much enjoyment do you get out of it? How much effort are you putting in? There's all these things they can look at, but the very loose rule of thumb is if you're having a loss 3 out of the last 5 years, that might be a hobby and not so much a business. So it doesn't mean the quick and dirty answer to that is it doesn't immediately disqualify you, but it is something you should start looking at the hobby rules and see if maybe you're having a hobby instead of a business.
So my understanding then is that you by yes, I would say by your 4th year, you have to turn a profit or show a profit. Otherwise, you fall under that hobby rule.
Not necessarily. At your 3rd year, I would say you should sit down with the tax professional and decide based on the IRS guidelines if it's considered a hobby or a business. It's not, because that's not a decision you just say, no, this is a business. There are actually very strict IRS guidelines, and you have to go down the list of them and decide what category you fall into.
Okay, because I am turning a profit, but I was just under the impression that by the 3rd year that if you didn't turn a profit, then there'd be like you said, there'd be other rules you have to follow.
There are. And if it becomes a
So-
hobby, if it's turned into a hobby, you lose most of your write-offs. And then you have to claim more income. But it is everything in tax. There is no such thing as I have a quick question, just so you know, that it doesn't exist, because everything in tax is based on 15 other facts. And our favorite answer is it depends.
And Gloria, I hope
Well, you've
I
answered
didn't
my question. Thank
confuse
you.
I hope, Gloria, that I didn't confuse you when I said my business has been in business for over 20 years and I haven't turned a profit yet. I mean, in respect that my business isn't showing enough income to be able to be a good risk for a lender. Let me put it that way. That's what I was saying. So,
Corporation
yes.
is different. Your corporation is paying out all its money to you as an employee. So that's absolutely fine.
Yeah, exactly. Okay. Thank you, Gloria. Erica, last
Thank
hand
you.
up in the air. Do you want to unmute and ask your question?
Hi, thank you. Thank you for allowing me to make this question. Samantha, I myself, I'm also a LDA. And my question to you would be, based on the fact that you do LDA work, notary, taxes, and all that, at the end of the year or during tax season, how do you claim all those incomes? Do you do one Schedule C for each category, or do you just do one Schedule C and you include all your income from everything that you do?
So I personally have everything under one business, and my business description includes all of the services that I offer. My insurance company hates me. They have tried for years to get me to create 4 different businesses, and I'm not going to do it because I don't want to, because I am the paperwork lady, and I'm going to do all the paperwork I can figure out how to do under one umbrella, and that's what I want to do. So my business, I don't list my business as notary public. I don't list my business as tax preparation. I list my business as paperwork assistance. And I have all those things under that umbrella. I have finally found an errors and omissions insurance that will cover me for all my services, because for a long time I was paying for an E&O policy for taxes and an E&O policy for notary and an E&O policy for paperwork. And I still didn't know if I was covered when I was helping people with apostilles and document translation. So I finally found a policy that covered me for everything, but it took years and they really don't like me.
Would you be able to share that information with me?
Yeah.
I do the same thing. So my business name is The Signing Lady, and I'm in the same boat. I'm like, I don't want to do a different name, a different business name for everything that I do. But then I'm like, I don't know if I should be doing that. You know, if I should be separating based, like an LDA, you don't have much travel expenses. So if I include that, that was just I was a little confused on that. Like, how should I report at the end of the year? But same here. I don't want to change my name and have a different name for, all my businesses, because somehow they all go hand in hand.
Yeah, absolutely. I have one business and it all falls under the one business.
Okay, awesome.
I did throw in Colleen Marie is my E&O broker, and she's the one that found that policy for me. It's like, I wonder if I have her email. If you email me, I can give you her email address too, but it's in there. Yeah, Jasmine, I see you that you should have multiple Schedule Cs. That is the best practice. There is no requirement for it.
Miss Samantha, the time has come.
Yes.
I want to personally send a very big thank you for coming and sharing this information with us. I would like to invite you to write blogs at Notary Stars to keep people abreast throughout the year. I'd love to have you back again at some point. I think you delivered tonight and in a timely manner. I'd like to ask everybody to please turn on their cameras right now, because we have a guest in the house and she's given us a plethora of information. I would like for you to turn on those cameras and let's give our signature Notary Stars wave. And though I'm going to say it the way I say it, and then I'm going to let Kirsten take us home. If you are not naked and you are not stuffing your face with a sandwich right now, please turn on those cameras. Please give our signature wave. Wave to Miss Samantha for all the information she gave us. Wave to yourself if you come back and watch the replay, and wave to those future Notary Stars. Kirsten, how do we say it professionally here at Notary Stars?
Well, first, again, I want to thank Samantha for all the great information. Thank you all for joining us today. Don't forget to save the chat if you want. And remember, as notaries, we're not just witnesses to signatures, we're witnesses to important moments in people's lives. Every document we notarize is a piece of someone's story, and our role is about upholding trust, integrity, and professionalism. Each signing is a chance to make a difference, however small. Keep asking questions, keep seeking guidance, and remember that growth comes from experience, successes, and challenges alike. You got this, and we're here to support you. Have a good night.
Good night, everybody.